welcome to the Deep Dive. Today we're tackling a really big topic, a major development in the UAE's economic landscape. The introduction of federal corporate tax.
Yeah, it's a huge shift.
It is, and it's definitely prompting a lot of questions for businesses operating here, I imagine.
Absolutely. I mean, the UAE was known for so long for its, absence of corporate tax. So this is a really significant pivot.
Great.
It signals a move towards a more internationally aligned fiscal framework. The first tax periods, they started on or after June 1st, 2023.
Okay, so what's our goal today? What are we aiming to unpack for you listening?
Well, we're going to try and provide a clear, kind of digestible understanding of the UAE corporate tax system, specifically as it stands now in 2025.
Getting up to speed quickly.
Exactly. Getting up to speed on what really matters, whether you're, say, running a business, thinking about investing, or maybe just curious about how the UAE's economy is evolving. We're using a comprehensive guide to sort of distill the key points.
Right. So our mission is basically to cut through the potential confusion, maybe the overwhelm, and just highlight the core things you really need to know. Okay, let's dive right in then. Why? Why the move to introduce corporate tax now? What's the sort of big picture here?
Well, there are several factors, really. A primary driver is definitely diversifying government revenue.
Less reliance on oil.
Precisely. Reducing that reliance on oil income, building a more sustainable economic model for the future. It also brings the UAE more in line with global tax norms,
Yeah, it makes sense.
which helps it standing as an international business hub.
Yeah.
So it's really a strategic move, I think, for long-term economic stability and global integration.
So future-proofing the economy, not just immediate cash. Got it. What's the legal foundation? What's the actual law this is all built on?
Okay, the bedrock is Federal Decree Law NONI 47 of 2022. That's the one on the taxation of corporations and businesses. Plus, of course, any amendments that have come along since then. This decree, it lays out all the fundamental rules. And it's crucial to remember, like I said, it applies to tax periods starting on or after June 1st, 2023.
So for a lot of businesses, maybe those on a standard calendar year, 2024 was their first full tax year under this.
That's exactly right, which means 2025 is when we'll see that first big wave of corporate tax filings.
Okay, so 2025 is really the year people are getting down to the details. Now, who actually pays? Who counts as a taxable person under this law?
The definition is pretty broad, designed to cover most commercial activity connected to the UAE. Basically, a taxable person is anyone conducting a business or business activity in the UAE,
Okay.
or who has what's called a permanent establishment here, or maybe derives income that's sourced from the UAE.
And that covers companies and individuals.
Yes, both, but under specific conditions.
All right, let's break that down. Companies, for the law calls them juridical persons, yeah?
That's the term, yes, juridical persons. And they're then categorized, usually based on residency.
Resident versus non-resident.
Exactly. Resident juridical persons are those either incorporated in the UAE or managed and controlled from within the UAE. That includes your typical mainland companies and also free zone companies.
Okay.
Non-residents are incorporated and managed elsewhere, but they either have a permanent establishment, like a branch in the UAE, or they earn specific income sourced from the UAE.
So if your company's set up and run from here, you're almost certainly a resident juridical person. What about individuals? You mentioned them too. Natural persons. When do they get pulled into the corporate tax net?
Right, natural persons. For them, the trigger, the key thing, is turnover. If their total turnover from business or business activities in the UAE goes over AED 1 million within a single Gregorian calendar year.
1 million dirhams.
1 million dirhams. If they hit that threshold, they become subject to corporate tax on their business income. Below that, generally, they're not.
That's quite a high threshold for, say, a freelancer or a sole trader.
It is. And importantly, there are specific types of income for individuals that are explicitly excluded from counting towards that million dirham threshold.
Oh, okay. What kind of income is excluded?
This is really key for individuals. First, your regular wage or salary from employment that doesn't count.
Good to know.
Also, income from personal investments. Think dividends, interest, maybe capital gains from selling shares you hold personally, as long as you don't need a commercial license for that activity.
Right, like a personal share portfolio.
Exactly. And third, income from real estate investments. Specifically, selling or leasing property where you don't need a license to do it. That's also excluded.
That clears up a lot for individuals, I think. Okay, let's shift focus to location. You mentioned mainland and free zone companies. It sounds like where you operate really matters here.
Absolutely. It makes a huge difference. Mainland companies, they generally fall under the standard rates.
For sure.
It's a two-tier system. 0% tax on taxable profits up to AED 375,000.
Okay, 0 up to 375K.
And then 9% on any taxable profit above that AED 375,000 threshold. And crucially, that threshold applies cumulatively across all the company's activities, not per activity.
Got it. Total profit. Seems straightforward enough for the mainland. But free zones, they've always had this special status, haven't they? How does the new tax regime treat them?
They still have a potentially very attractive position. Free zone companies can benefit from a 0% corporate tax rate, but only on what's specifically defined as qualifying income.
There's a catch.
Well, conditions. They need to meet a specific set of conditions and be recognized as a qualifying free zone person. You'll hear the acronym QFZP a lot.
QFZP. Right. So what does it take to become a QFZP? What are these conditions?
Okay, first, you have to be a juridical person, so a company incorporated or registered in a free zone.
Makes sense.
Second, you must actually derive this qualifying income. We need to define that. Third, you have to maintain what the law calls adequate substance within the UAE, specifically within the free zone.
Adequate substance. We'll come back to that.
Yeah. Yes. And fourth, you must not have actively elected to be subject to the standard 9% corporate tax regime. You have to stick with the free zone rules.
Okay, so several hoops to jump through. Let's talk about qualifying income. What actually counts towards that potential 0% rate for a QFZP?
Qualifying income generally comes from two main sources. One is income earned directly from carrying out specific qualifying activities.
Right.
The other is income derived from transactions with other free zone persons, but not involving excluded activities or income from transactions with entities located completely outside the UAE.
Right. So what are these qualifying activities? Can you give some examples? What sort of businesses are we talking about?
Sure. The list includes things like manufacturing or processing goods or materials,
Yep.
holding shares in securities as a business, ownership and operation of ships, regulated activities like fund management, wealth
Ample
management.
services within the zone.
Yes, regulated ones. Also providing headquarters services or financing services, but specifically to related parties within your group. Things like aircraft leasing, logistics services, and also distribution of goods, but typically within a designated zone or for export. It's aimed at genuine value-adding activities.
That makes sense. It covers quite a range. Now, you mentioned excluded activities. What's on that list? What income gets taxed at 9% even if you are a QFZP?
Right. This is the flip side. Excluded activities, where the income is generally taxed at 9%, include most transactions with natural persons individuals.
So selling directly to consumers from a free zone might be an issue.
Generally, yes, though there are a few exceptions, like in shipping or certain fund management scenarios. Also excluded are banking and insurance activities that fall under specific regulatory oversight. They have their own rules, effectively.
Okay.
Income from owning or exploiting intellectual property assets is often excluded. And, importantly, income from immovable property, like real estate, unless it's commercial property located within that same free zone or another free zone.
So selling or renting apartments outside the free zone, that's likely 9%.
That's likely 9% income, yes. So if a QFZP earns income from any of these excluded activities or any other income that doesn't fit the qualifying income definition, that slice of profit gets taxed at the standard 9% rate.
So it's really crucial for free zone businesses to understand this split. And you mentioned adequate substance earlier. What does that actually mean in practice? It sounds a bit vague.
It is a bit subjective, but the guidance points towards having a genuine economic presence. It generally means having, sufficient physical office space for your activities, employing an adequate number of qualified staff, incurring adequate operating expenditure within the zone, and actually conducting your core income-generating activities from the free zone.
So not just a letterbox company.
Exactly. The idea is to prevent companies from just using a free zone registration as a shell while doing all the real work elsewhere. You need boots on the ground, essentially. Real operations.
Right. Makes sense. Okay, let's recap the money side. We've got a 0% up to 375K, the 9% standard rate. And for QFZPs, potentially 0% on qualifying income, 9% on the rest. Are there ways for businesses to get out of paying altogether exemptions?
Yes, definitely. The law provides several exemptions for specific types of entities and certain kinds of income. Some are automatic, others need notification or an application.
Who gets off the hook automatically?
Government entities, federal and local government bodies, and their related entities are automatically exempt. They generally don't even need to register unless they happen to conduct a separate business activity that is taxable.
Okay. What about, say, oil and gas companies? Natural resources?
Businesses involved in extractive activities, so oil and gas exploration and production, and also non-extractive natural resource businesses can be exempt, but they need to notify the Ministry of Finance and meet specific conditions laid out. Like government entities, usually no registration needed unless they have other taxable businesses.
And charities, public benefit organizations.
Yes. Government-controlled entities carrying out mandated activities and qualifying public benefit entities, think registered charities, religious bodies, social welfare organizations, can be exempt too. This usually requires them to be listed in a specific cabinet decision and meet ongoing conditions. These types generally did need to register, though, by October 1st, 2023.
Interesting. What about investment funds? Pension funds?
They can also be exempt. Qualifying investment funds, public and private pension or social security funds, and also UAE subsidiaries that are wholly owned and controlled by certain other exempt persons. They can apply for exemption.
Apply, so it's not automatic for them.
No. For these, it requires a formal application to the Federal Tax Authority, the FTA, and getting their approval. Plus meeting ongoing conditions, of course. Their registration deadline was June 1st, 2024.
Okay, and we already covered the exemptions for individuals' wages, certain personal investment income, some real estate income.
Correct. And one more significant one, especially for smaller businesses, is the small business relief.
Ah, yes. Tell me about that again.
It's a temporary measure, currently available until December 31st, 2026. Resident persons, so not just companies, could be individuals too, whose total revenue is AED 3 million or less in the current tax period, and was also AED 3 million or less in all previous tax periods.
3 million revenue threshold.
Yes. If they meet that, they can elect it's an option to be treated as having no taxable income for that period.
Wow, that's powerful for small businesses.
It is, but crucial caveats. It's not available to qualifying free zone persons, QFCPs. And it's also not for members of large multinational groups, specifically those with global consolidated revenues over 750 million euros.
Okay, targeted relief. Any other major exemptions? Maybe for income from subsidiaries?
Yes, the participation exemption. This is important for holding companies or groups. It can exempt dividends and capital gains a UAE company receives from its shareholdings in other companies, whether those are UAE-based or foreign.
What are the conditions for that?
Generally, the UAE parent company needs to hold at least 5% of the shares in the subsidiary, or the initial investment must have cost at least AED 4 million.
Okay.
And that shareholding usually needs to be held for an uninterrupted period of at least 12 months. Plus, and this is key, the subsidiary company itself must be subject to corporate tax at a rate of at least 9% in its jurisdiction, or meet equivalent conditions under UAE rules.
So it stops profits being taxed twice within groups where tax is already being paid.
Essentially, yes. And there's one more related exemption, the foreign permanent establishment exemption.
For branches overseas.
Exactly. A UAE resident company can elect to exempt the income that's attributable to its permanent establishments, its branches located in other countries. The condition here is that the income of that foreign branch must be subject to corporate tax in that foreign country at a rate of at least 9%.
Okay, so quite a few potential exemptions to be aware of. Now let's get practical. Registration. You figured out you're probably taxable, maybe not exempt. How do you get official?
Right. The general rule is all taxable persons must register with the FTA and get a corporate tax registration number, a TRN.
Everyone who has to pay tax needs a TRN.
Yes, and you do this through the FTA's online portal, EmaraTax. It's a separate registration from VAT or excise tax, even if you already have TRNs for those. The FTA can also ask certain exempt persons to register in some cases.
What about the deadlines? They seem a bit complicated, especially for companies that were already around before the law fully kicked in.
They were staggered initially. For companies, juridical persons that existed before March 4th, 2024, the deadline depended on the month their trade license was issued.
Can you run through those quickly again?
Sure. If your license was issued in Jan or Feb, deadline was May 31st, 2024. March-April license, June 30th, 2024, May license. July 31, June. August 31st, July. September 30, August-September. October 34, October-November. November 30th, and December licenses had until December 31st, 2024.
Okay, quite specific. What about businesses starting up now, say in 2025, or anytime on or after March 1st, 2024?
Much simpler for them. The deadline is within 3 months from the date they are incorporated, established, or legally recognized in the UAE. So get your license. You generally have 3 months to register for CT.
3 months from getting the license.
Okay.
And individuals. Those natural persons who crossed the AED 1 million turnover threshold in 2024.
Their deadline for registration was March 31st, 2025.
So hitting those deadlines is obviously critical. What's the actual process like on the EmaraTax platform?
It's all online. You need an account first, either create one or log in if you use EmaraTax for VAT, say. Then you find your taxable person profile or create one and select the corporate tax registration option.
And fill out a form.
Pretty much. It's an online form. The FTA estimates it takes about 30 minutes if you have your information ready. You submit it, and then the FTA processing time is usually up to 20 business days.
What if you need help?
You can get assistance through the designated Tehsil centers as well.
What documents do you need to have handy for the registration?
Depends if you're an individual or a company. For natural persons, usually your trade license if you have one, plus your Emirates ID or maybe passport copy. For legal persons, companies, you'll need the trade license copy, the Emirates ID or passport of the person who's the authorized signatory for the company.
Right, the manager or director.
Exactly. And also some proof that they are authorized to act for the company, like a power of attorney or board resolution. Files need to be PDF or Word, generally, and there's a size limit, usually around 5 million B per file.
Okay. Here's a question I bet some people have. What if my company is registered, has a license, but it's dormant, not trading, no income yet? Do I still need to register for corporate tax?
That's a common question. The guidance isn't super explicit for every single scenario in the source we reviewed, but the general principle is that juridical persons set up in the UAE are subject to the law.
So probably yes.
It strongly implies that yes, even non-operational or dormant companies likely need to register. The safest bet is always to check the latest official guidance directly from the FTA or get professional advice for your specific situation. Exempt persons, as we said, might not need to register unless they start doing taxable business.
Okay, better safe than sorry, check the official source. Right, so you're registered, business is running. Now the ongoing part, compliance, tax periods, filing returns. How does the tax period work?
Your tax period is normally just your company's financial year.
So January to December for many.
Often, yes, the Gregorian calendar year. But it can be any consistent 12-month period your business uses for its accounts. For brand new companies, the very first financial year might be shorter or longer. The rule allows between 6 and 18 months. And that first period counts as the first tax period, provided it started after June 1st, 2023.
And the filing deadline. When do you actually have to submit the tax return?
You get 9 months. The deadline is within 9 months from the end of your tax period.
9 months from year end.
Correct. So if your financial year ends December 31st, 2024, your tax return is due by September 30, 2025. And filing is also done online via EmaraTax.
What actually goes into the tax return? It sounds like it could be pretty detailed.
It is, yeah. It's quite comprehensive. You need your basic taxable person details, of course. Any elections you're making under the law, like small business relief, perhaps. Your accounting schedule, which means attaching your financial statements.
The actual accounts.
Yes. Details of any accounting adjustments you've made for tax purposes, any exempt income you're claiming, details of any tax reliefs like foreign tax credits, other adjustments to get to your final taxable income figure, then the calculation of the actual tax liability, and information on any tax credits you might be using.
It's a lot already.
And there can be more. Specific schedules might be needed if you're a QFZP, or if you've had significant transactions with related parties over AED 4 million, usually triggers this, or with connected persons over AED 500,000 there, or if you're claiming that participation exemption for dividends. Our source mentioned a specific guide, CTG TGXR1, for more detail.
Okay, and the financial statements you attach, should they always need to be audited?
Not always, but often. An audit is mandatory if your company's total revenue for the tax period is over AED 50 million.
50 million dirham is revenue.
Yes. Or an audit is mandatory for all qualifying free zone persons, QFCPs, regardless of their revenue.
So all QFDPs need an audit.
That's the rule. And if you need an audit, it has to be done by a licensed auditor registered in the UAE. You have to include the auditor's details and their opinion in your tax return. Below 50 million revenue and not a QFCP, an audit isn't legally required by the tax law, but it might be needed for other reasons or just considered good practice.
Got it. Beyond the return itself, what about day-to-day record keeping? What books of accounts do businesses need to maintain?
They need to keep comprehensive records, basically anything that supports the figures in your accounts and tax return. Think records of all your transactions, your assets, liabilities, stock levels if relevant.
Like invoices, bank statements.
Exactly. Bank statements, loan agreements, sales ledgers, purchase ledgers, invoices received, invoices issued, purchase orders, contracts, the works. And your accounts need to follow recognized accounting standards in the UAE, usually IFRS, or maybe IFRS for SMEs.
And how long do you need to keep all this paperwork?
7 years. Both taxable persons and exempt persons have to keep these records for a minimum of 7 years after the end of the tax period they relate to.
7 years is quite a while. Okay, the scary part. What happens if you mess up? If you don't comply? What are the penalties?
Yeah, non-compliance can be costly. Late registration, for instance, can attract a penalty of AED 10,000.
Ouch. Just for being late to register.
Yes. Filing your tax return late, that's AED 500 per month for the first 12 months. It can potentially increase after that.
Okay.
If you file a return, but it's incorrect or incomplete, there are penalties for that too. The guide didn't specify exact amounts, but it's usually based on the tax underpaid or sometimes a fixed amount, depending on the error.
And not keeping proper records, like those documents we just talked about.
Failure to maintain proper records can lead to a penalty of AED 10,000 per violation. And if it's a repeated offense within 24 months, that can double to AED 20,000.
So the penalties add up quickly. It really pays to get it right. Has the FDA offered any breathing room, any relief, especially for this initial period, like 2025?
Yes, thankfully they have acknowledged it's a new system. There were some specific reliefs for 2025. For instance, a waiver of the late registration penalty if you manage to file your first tax return within 7 months of your first tax period ending.
That's helpful.
And there was also a grace period up until the end of March 2025, allowing businesses to update their tax records for the period Jan 1, 2024 to March 31st, 2025, without facing penalties for past inaccuracies during that window.
Okay.
Plus, generally, businesses can apply for administrative penalty waivers or potentially arrange an installment plan for paying penalties, though conditions apply like needing at least AED 50,000 outstanding in penalties for one tax type to usually qualify for installments. You request this through EmaraTax.
Good to know there's some flexibility. It really highlights how important it is to plan ahead. Which brings us nicely to playing it, smart tax planning for success. What are the key strategies businesses in the UAE should be thinking about now?
Well, effective planning starts right at the beginning with structuring, really thinking through mainland versus free zone, which makes more sense for your specific business model, your activities, your customers.
That initial decision is critical.
It really is. Then, if you have multiple related companies, look into forming a qualifying group or maybe even a tax group. These have specific ownership thresholds like 75% or 95% common ownership, but they can offer benefits like filing one consolidated return or offsetting losses within the group.
Streamlining things.
Exactly. And absolutely crucial for any group, transfer pricing, making sure any transactions between your related companies are priced correctly at arm's length, following UAE rules. That's a huge compliance area.
Right.
Also, leverage double taxation treaties if you have international dealings. See how the UAE's treaties might reduce withholding taxes or prevent double taxation. And for the really big players.
The multinational.
Yes. Those large multinationals with global consolidated revenue over 750 million euros need to be aware of the new domestic minimum top-up tax, the DMTT, coming in from 2025. It's part of the global minimum tax initiative aiming for a 15% effective minimum rate.
Pillar 2.
That's the one. And finally, keep an eye out for potential future incentives. The UAE might introduce tax breaks for things like high-value job creation or R&D investment down the line.
Okay, lots to consider at the strategic level. What about specifically for those free zone companies trying hard to get that 0% rate on qualifying income? Any specific planning tips for them?
Oh, absolutely. For QFCPs aiming for 0%, the name of the game is strict adherence to the rules.
No cutting corners.
None. You have to continuously meet all the QFCP conditions we discussed. Maintain that adequate substance, genuinely derive qualifying income, comply meticulously with transfer pricing for any related party dealings.
Documentation must be key.
Crucial. Keep clear, auditable records that segregate your qualifying income and related expenses from any non-qualifying income and expenses. You need to be able to prove the split.
Great.
Be aware of the de minimis rule, too. This allows a small amount of non-qualifying revenue without losing your QFZP status, but it's capped the lower of 5% of total revenue, or AED 5 million. Exceed that, and you could lose the 0% benefit entirely for that year.
Wow, okay, that's a critical threshold.
Very critical. And finally, stay updated on any sector-specific rules. For example, the guide mentions specific rules for investment funds under a cabinet decision from 2025. Your industry might have unique nuances.
Okay, and for the smaller end of the scale, single-person businesses, sole traders, freelancers, what's the key advice for them?
Well, if you're operating as an individual, a natural person, the simplest thing is keeping your total business turnover under that AED 1 million threshold per calendar year. If you stay below that, corporate tax doesn't apply to you.
Manage your turnover if possible.
Yes. If you do go over the million, then focus on claiming all legitimate business expenses to reduce your taxable profit. Remember, the first AED 375,000 of that profit is taxed at 0% anyway.
So even above a million turnover, there's still that 0% band on profit.
Correct. You should also weigh the pros and cons of incorporating. Setting up a proper company might give you access to that 375K threshold and other benefits, even if your turnover is high. And definitely check if you're eligible for that small business relief revenue under AED 3 million while it lasts, until the end of 2026 currently.
Good practical tips. Looking across the board, are there common mistakes or pitfalls you see businesses falling into with this new system?
Yeah, there are definitely a few recurring themes. Basic bookkeeping is number one. Not keeping accurate, complete, and timely records is a recipe for trouble.
Foundation needs to be solid.
Absolutely. Then, miscategorizing expenses, claiming things that aren't actually a deductible for tax purposes. Missing deadlines is another big one for registration, for filing. Simple mistakes, but costly.
Right.
Calculation errors in the return itself. Not properly understanding or documenting transfer pricing between related companies, failing to meet the economic substance requirements, especially for QFZPs, not claiming reliefs or exemptions you're actually entitled to, leaving money on the table.
That's a mistake too.
It is. Commingling personal and business expenses, a classic issue for small businesses. And just generally, not having adequate documentation to back up transactions if the FTA comes asking.
It sounds like there are many ways to trip up if you're not careful, which leads to the question, is it worth getting professional help? What's the value of hiring a tax consultant?
Honestly, for many businesses, especially with a new and complex system like this, I'd say the value is significant. A good tax consultant brings expert knowledge of the law, its nuances, the latest FTA guidance.
They live and breathe this stuff.
Exactly. They can help right from the start with registration, ensure your returns are prepared accurately and filed on time. But beyond just compliance, they help with strategic planning, structuring efficiently, minimizing liabilities legally.
Optimizing your tax position.
Precisely. Ensuring you meet those tricky transfer pricing and economic substance rules, identifying and helping you claim all the reliefs and exemptions you're due. They can support you if you face an FTA audit, which can be daunting. They keep you updated on law changes. So peace of mind and maybe actual savings.
Definitely potential savings, both through optimization and, crucially, by avoiding those potentially hefty penalties for non-compliance. Often, the ROI on good tax advice is very positive.
Makes sense. Okay, so to wrap things up then, this deep dive into the 2025 UAE corporate tax system really shows it's a landmark change for the country's finances, doesn't it? With very specific rules depending on who you are and where you operate.
Absolutely. Careful planning, diligent compliance, they are just non-negotiable now for businesses in the UAE.
Yeah. Understanding who's taxable, what rates apply, what exemptions might be available, and knowing your registration and filing duties inside out, that seems essential.
It is. And remembering the potential impact, the cost of getting it wrong, it really underscores why businesses need to be proactive and informed about their tax obligations now. So for you listening, perhaps the final thought is this. Take a moment to really consider how these specific regulations touch your situation, your business. This isn't just a small tweak. It's a fundamental shift in the UAE's economic landscape. Exploring more resources, maybe seeking that professional advice we talked about, that could be a very smart move to navigate this new fiscal reality effectively.